Yo, what's up? End of week 15. This has been a crazy week as well. Last week, the volatility was extremely high, and we just couldn't uh, capture good opportunities that are in a steady and consistent basis. We had to take almost every single trade. This week has been a lot better, slightly better, not a lot better. We still had a lot of different trades, but we're down a little bit from the overall gain, but not to worry. In April this month that we're trading in, we're up around 8.7% in 1 month. This is amazing news because I said to you guys that I'm going to turn $7,000 into $1 million as soon as possible, right? And we want to do it as in a consistent basis as possible. Because if I can turn $7,000 into $1 million, my strategy can turn $1 million into $100 million. That is the power. Because a lot of the strategies in today's market, especially people, gurus who are selling you, they only work when you have a small amount of capital. Think about it. Money moves the market. When you have a large amount of money, it will move the market even more. And so a lot of these short-term strategies that a lot of gurus are selling to you are strategies that just, you know, how do I say this? They just can't last the test of time when your account size grows. Some penny stock strategies require you to have a maximum of $40,000 because if you exceed that, you would be the bigger market in the penny stock market, and you would, lose really quickly. It's very difficult for those who don't understand trading to grasp this concept, but I'm just going to let you know that the markets you play in and the strategies that you use matter a lot in the long run, depending on where you want to go. And so I want to get to that goal. I want to help people get to that goal. I want to get to that goal because I want to pay off my home mortgage. I want to do this for my family first before helping the community. It's all about having what you have first. It's all about supporting yourself first before you can support someone else. There's a really great quote, I forgot by who, but you have to be selfish in order to be selfless. Don't be selfless first, because if you try to be selfless without any foundational wealth or without any foundation in terms of something that you can support yourself with, your selfless is just draining you. You cannot give as much as someone who's first selfish, who has accumulated a large amount and then giving it all out, right? So there is a difference, and there is a tremendous difference if you think about it. I'm currently 20 years old. I still have a long way to go, but this is week 15, so I hope you guys enjoyed the video. Let's jump straight into it.
Alright guys, welcome to another week of trading recap. So this week we had 5 trading opportunities in total. 2 opportunities on the Australian Japanese yen, 1 on the Euro British pound, US dollar Swiss franc, and the Euro CAD. 3 trades on the 21st and 2 trades on the 24th of April. And so based on what happened and our previous statistic, last week we started off with $7,500, and this week we're just down around $270. So it's a losing week, but still maintaining above the break even after literally 3 months of lackluster result below my initial capital funding. So we're seeing consistent results right now with trading, and I'm really happy to be on the winning side. And so let's jump straight into the video. Let's see what we can learn from our trading recap and how we can grow and do better. So from this trade, we have Australian Japanese yen on the 21st. So Australian Japanese yen on the 21st. We scroll to the 21st. Before that, as you can see on top, there's this strong volume accumulation level. You can see that right here, the volume were at its highest with this weekly volume profile before prices shot all the way up. If I could easily draw right here, it's prices going sideways and then shot all the way up, right? And so we believe that as prices come back down, right, when they come back down, and retest this level, it's gonna go all the way back up again. So this was the philosophy. We went straight into the, this accumulation level, and I identified 67.84. We're expecting a bounce from this level when prices touch it, but apparently when price came back, it was at 67.83, and then it crashed all the way down to 67.58, greater than our 20 pip stop loss. So if we look, our take profit was somewhere around here, stop loss was somewhere around here. So we lost on both occasions. We got out, however, taking a loss, taking a loss $218. But then oftentimes when you take a loss, most people would forget about this level, but this strong price action, downward price action. If you can look on the 15-minute chart, you see this red line. Yes, this initial first two candles that is going downwards, that goes to show that it's strong selling. So we believe that sellers have already overtaken the buyers, and when price comes back up, it's going to retest this level and go back down. So this was our philosophy, and so we waited for something called a reversal trade. So when prices came back up over here, we took a short position at around 86, but prices went to its lowest at around 68. So later we moved the stop loss to this area, got stopped out afterwards, and took just a small profit, because there are apparently some news related to the Australian dollar, right? It was the RBA cash rate, and so we got out before the spike and this downward aggressive momentum. So these were the two trades we took on Australian Japanese yen. Let's go straight to the euro pound. Okay, so here we can see on the euro pound, again, this works off from a previous long-term volume accumulation level. Prices came down, right? Strong level, sell off from here. You believe that as prices come back up, it's going to retest this level and go down. Unfortunately, prices just shot all the way past it, but this is another sign showing that buyers are a lot stronger. So we waited for the retest for a buy on this level. However, from what we can see, not only did price come too close to our level that's within 3 pips, it also moved by more than 8 pips. It is 3 pips within our level at 65. It moved also more than 8 pips, which is around 10 pips here. And at the same time, it created a candle chart pattern that fulfilled our 2 requirements for no trade. So we didn't trade. So the first requirement is that the price cannot be 3 pips within the trading level and move away 8 pips. And at the same time, it should be a confirmation candle where there's candle body over candle body in order for a trade to be invalid. And this was an invalid trade, so we couldn't take this trade. We took a loss on this pair. Next up is the dollar Swiss franc. Looking at the dollar Swiss franc, we had a potential short opportunity that was a long time ago. I remember, yeah, right here. If I look at the 30-minute chart, over here there was a slight, trend set up where prices came down, consolidated a little bit, and then shut all the way back down. So it was at this level, and if we want to see how many days passed, 1, 2, 3, 4, 5, 6, 7, 8, all right, 9, 10, 11, 12, 13, for around 13 days. So around 2 weeks we waited for this price action to come back. Prices did come back, and I actually took this trade while I was in a birthday party. So prices did come back, touched this level. We had a 20 pip stop loss right on top, somewhere around here. 20 pip take profit was somewhere around here, right? So oopsie, right? So prices didn't get past this level, but then when it shot back down, it didn't touch the level as well. And I got out 15 minutes earlier for break even, but if I had held my trade for an extra 10 minutes, so there was a important news from the dollar. It was the unemployment claims. 15 minutes before the trade, the news release, prices were at this level, around this level, 97.58, 59. But 5 minutes before the news release, it went here around 44. So I've seen this pattern a lot of times. I get out 15 minutes prior to the release because I just want to be on the safe side. But apparently the profits expectations will be a lot higher if I just waited 5 minutes before the news release to get on the trade. Apparently the price action really just follows the expected price action right before any red news, high impact news release. Really typically follows the setup we have here. So we should just keep it a little longer and hold it there next time to increase our profit potential. So we had the Swiss franc trade. We did get out break even. Yeah, just $1.2, $27. Last one is the Euro CAD. So the Euro CAD, we had drawn this long time ago. Right here, volume accumulation. Prices went up. When price comes back down, we believe that these buyers who are really heavy at this spot will be defending their positions. So came down right here, touched this level. We got in with a buy order. 79 went here to 63. Really close to the 20 pip break out. Sorry, 20 pip stop loss before returning back up, creating a win trade. Right, a winning trade over here of $143. So in total, we had a backtrack, but it's still fine because that's how we learn. That's the market we cannot control. And so currently my total profit loss is 3.32%. I'm around 8%, above the figure I had by my balance that was last week. Last month, right? And so you see, throughout the first few months of trading, I was below that level. I was seriously below 6,000, 6,000, 6,000, 6,000. Yeah, below the $7,000 I deposited until recent months, around the mid-April, where I'm starting to take back control. So I believe this is amazing. We're making new progress, breaking new grounds. I believe the coming months would show more promising results, and I hope you guys continue along this journey with me. Thank you so much. I'm just gonna put it out there for this video for my accountability as well, and I hope you guys enjoy. Peace out.